Not so long ago, the birth of the internet completely transformed our society, a web of free-flowing information. Early investors of the internet saw this potential and poured their money into the market, hoping one day it would make them rich. This eventually led to one of the greatest stock market bubbles of all time, the dot-com bubble, which eventually led to one of the largest stock market crashes of all time, the dot-com crash. Only a few companies survived the crash. So in this video, we will explore how these few companies survived and use our findings as a template to make better long-term crypto investments. We see similarities in crypto today. We know that crypto is the coming of Web 3.0, a web of free-flowing value. And we do see some early signs of a bubble. So I believe if we prepare ourselves now with this historical perspective, we can better endure a potential crash in crypto. By the way, standard disclaimer, don't take financial advice from a stranger on the internet. This is not investment advice, and investing is risky, period. So do your own research and invest only what you can afford to lose. The material in this video is for educational purposes only. In the 90s, the introduction of web browsers and TCP/IP caused the internet to explode in adoption. The internet at this time was only used for simple things like email, forums, and blogs. Data rates were slow, and I'm not sure if you remember, but you had to dial up on an internet modem. Dialing up would take a couple of minutes and you'd hear a funny sound coming from the modem. However, the internet was no less amazing. It completely transformed communication, and owning a computer was considered a necessity, not a luxury anymore. It was obvious for startups and companies that internet-based commerce was a huge opportunity. This got investors and venture capitalists salivating for profits, which eventually led to the dot-com boom. The dot-com boom was a stock market bubble caused by massive speculation of internet companies. During this time, the Nasdaq, a mostly tech-based stock market index, rose by 400% in 5 years. Now, 400% in 5 years in crypto doesn't actually sound that fantastic. However, in traditional stocks, 10% a year would be considered good. So a 400% gain in a traditional stock market index is absolutely insane. The FOMO was very real, something I'm sure we all feel in crypto. But back then, it was very, very real. There are stories of people quitting their jobs and taking on loads of debt to day trade for a living. Even the media took advantage of this and reported on the stock market with the same level of suspense as sports events. By the way, just between you and me, while making these videos, I usually find things that happened in the past which are eerily similar to what is happening today in crypto. And this is definitely one of them. Today you see CNBC and CNN hyping up Dogecoin and NFTs like no tomorrow, and it seems like everyone wants to day trade crypto. It really makes me feel like a bubble is slowly forming again. However, the dot-com bubble eventually burst, losing 78% from its peak. The party came to an end, and in the aftermath, only a few notable companies survived. Now, there seems to be several reasons why the bubble burst, and why so many internet companies went bust. But the most significant reason was that so many of the internet companies were not actually profitable. They were operating at a loss. Strangely, this was known to investors at the time, and apparently losing money was a hallmark of a successful dot-com company. You see, the name of the game in the 90s was to grow and capture market share as fast as possible. They just didn't care about profit and having a solid business model. They were mesmerized by the promise of this new technology, and who could blame them? Now, digging deeper into a few of the companies that failed, we can confirm that they were not making any money. Pretty much every company went bust, but few survived the crash. These companies survived the crash by focusing on the fundamentals of their business model. They moved away from hyping up their services and towards actually building their cash flow. But how does knowing this help our crypto investments? And are we in a crypto bubble right now? Well, I don't think we're in a full crypto bubble today, but there are similar signs to what we saw in the dot-com bubble, and if not, at least very early indicators of a bubble. In crypto, we can see many projects that seem to be great ideas on the surface. We look at their website, read all their fancy words and all their amazing benefits, and we really do get a sense that there is great potential behind each one. Leave a comment below on a crypto you've found recently that sounds like a great project. Now, pretty much every project focuses on attracting developers to build on their protocol, and pretty much every project spends on marketing to attract retail investors to buy their coins. We saw this in full effect, especially during the ICO craze of 2017. Another thing to take into account is the massive word of mouth generated by retail investors. Retail investors shill their own bags, wear their crypto like a badge, and treat it like a religion. The crypto space is pretty tribal, but for marketing purposes, this is great for cryptos as each investor is turned into a mini brand ambassador. Also, not to mention, large numbers of new investors are joining the market every single day. These new investors get distracted by prices and the very seductive chance of earning a huge amount of money, but do not base their investments on solid fundamentals. Many just invest in whatever a YouTuber or an Elon Musk tweet tells them to, thinking that they can get rich quick. Many projects get pumped up and hyped up because of this, becoming very popular very quickly. This then attracts more investors, and the cycle goes on. All of this heavily warps our view of the market, and it becomes hard to tell which crypto projects are actually valuable. It becomes hard to separate the truly valuable projects from the ones which just have a good marketing team. From our findings in the dot-com bubble, we know that the companies that survived moved their focus from marketing to developing cash flow. So, how do cryptos generate cash flow? Well, they don't really, as they aren't exactly companies, but you can think of them being similar to commodities. So, okay, how do commodities generate cash flow? Well, they don't either, but they increase or decrease in value based on market demand. Take oil, for example. Oil goes up in price when the demand rate is higher than the supply rate. And when the supply rate is higher than the demand rate, oil prices go down. We see this characteristic of commodities clearly in Bitcoin. Every 4 years, the supply rate of Bitcoin halves in an event called the halving. We then see new all-time highs set for Bitcoin right after. And this happens every 4 years like clockwork, ever since Bitcoin was created. Therefore, for your crypto to be able to survive and come back from a massive market crash, the demand rate for your crypto should always be higher than the supply rate, generally speaking. But how can you tell which projects have a high demand rate? Well, demand is ultimately determined by the utility of a project. So, what is your crypto project actually used for? The more use cases it is being used for, the higher the demand, the higher the price will go. So, to illustrate this, let's go back to the oil example. Oil prices rise during the summer due to more people driving for summer vacations. The use case for oil here is driving your car. Oil prices also rise due to countries like China rapidly growing, leading to an increased use of construction vehicles. The use case here for oil is driving a lorry or operating a crane, or maybe consumed as a raw production material. Oil has a lot of utility and use cases, so it's something that is always in demand. So for your crypto, you have to ask yourself, what is its use case? And is it actually going to be used? Will someone in real life physically pay to use it? Personally, I've worked in a startup environment for over 5 years, and honestly, every project sounds like an amazing idea, but when it comes down to getting customers to pay for it, it's a different story. You have to be very honest, and if you personally can't see your crypto project being used to solve any real life problem, then it might not be the best thing to be invested in. It's hard to do this, but that's what makes you a successful investor. Most people don't do this, so if you do, you are already beating 80% of the competition. So, to summarize once again, we learned that companies survive the crash by focusing on solid business fundamentals, such as building strong cash flow. For cryptos to survive a similar crash, the crypto needs to focus on solid utility, such as will it actually be used for its use case? Honestly, making this video created more questions than answers. There's so much that I want to share with you, but I really couldn't fit it into this video. I stumbled on several interesting topics while doing the research, such as value capture and more events in history which I think we can learn from. By the way, if you want me to cover anything in particular, just let me know. Now, at the end of every of these videos, I recommend a couple of crypto projects which seem to have the characteristics we discover in our research. Here are a couple of projects which I think do. XRP is an interesting coin. Many retail investors hate it as they call it the banker's coin. However, if you put your prejudice aside, you stand to make life-changing money. The XRP protocol is being developed on by several hundred banks around the world and has already seen real-life usage. It was being used for cross-border settlements by MoneyGram, and Ripple has made a recent acquisition in Trianglo to further develop this use case. ICX is usually called the Ethereum of South Korea, although I don't really like to call it that. They are working on something even more ambitious than Ethereum. They're building a network of networks allowing interoperability between blockchains and legacy systems. Their projects are already seeing real-life usage in South Korea, such as the Jeju Island project and digital identity projects in South Korea. They are in a unique position as South Koreans tend to use their own country's technology. I've visited South Korea before, and pretty much everyone was driving a Samsung car. So something you have to understand with this one is that everyone in South Korea will most likely use it. QNT is a sleeping giant. It is the one coin I believe can make you life-changing money. I try not to hype things up on my channel, but this is one project I am so excited for. They are solving cybersecurity, interoperability, and ease of use for large enterprises through the first ever blockchain operating system, the Overledger. They are already partnered and integrated with SIA, a titan in the software enterprise market for banks. Literally, just look them up and you'll see how big SIA is. QNT is integrated with them, and their Overledger will be an option for banks to plug and play blockchain through the SIA portal. Thank you everyone for watching. If you liked the video, hit the like button and subscribe. I make videos like this every week on fundamental analysis for crypto. I base this on deep research and share my findings with you, so we can learn together and make better long-term investments. So, thanks again and see you next week.